The market barely holds support at the close. Can the bulls rally? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that the market should come on down to the 47-45 area to test support, and what we get from there would kind of tell us the story here moving forward. The market did just that, coming down to test that support number at the close, spiked through it, and barely closed above it at the close. So now the question is, can the bulls rally? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before I jump into the charts, we had another winning day today. And it's not just about a day of trading or a week of trading or even a month of trading. It's about long-term success. Trading and investing is a long-term gain. You can see on the screen one of our investors has doubled his account over the course of the last year with us. And these are the kind of trading tips, habits, and strategies that we teach in our room. PT is killing it with his income trades, and the traders in the room are doing well and making money. If you want to be part of this winning team, stay tuned for later in the video, but for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, and we had two paths yesterday, and both of them really involved us coming down and testing this 47-45 area, so we were pretty confident that that's what was going to be the case, which we did. The market spiked just below it and then rallied back up at the close to close above it. Now, we've seen this show before. We had this low here, and they needed to hold it, and they did by spiking below it and rallying to a new high. And now they've come down and done the same kind of thing. Now, they haven't rallied out of here yet, but the bulls do have the opportunity to still hold this low. Even though they poked below the number, that doesn't mean support has broken, as buyers do sit below the number, above the number, and at the number. So you don't always see a move come down to support and hold above or at the number. They can spike it through and then come back the other way. So we will see if that's what happens moving forward. But as of right now, they have still held support, and we now need to see if they're going to be able to hold it for the longer term and push back up to this 48.81 area or break down. So let's talk about the paths and what they look like and what we're looking at on the screen. So yesterday I told you to put way, way, way on the back burner, but just to have it in your mind that this B wave is still alive. We are not over the all-time highs on the SPX. And with that, we have what I would call a reasonable 5 waves down off of the high. I'd like to see them come down a little bit lower to at least 47.36, but really even more like 47.08. And the reason I want it to extend here in 5 is because wave 3 of 3 came down to the 1382. Wave 4 would have, or wave 5 of 3 would have come down here past the 1764, right at the 1764. So you would expect wave 5 to come down to at the very least the 2.0, but more often it would extend into the 2618 area, which is down around 47.08. Now, all of this should be taken with a grain of salt. I told you to put this B wave way on the back burner because it is not a primary path. It's not even a path I'm considering until we see a bigger structure, but I did want to go over why I do have a 5 wave count on the screen. So keep that in the back pocket. If they give us 5 down, 3 up, and 5 down again, then we'll start to pay a little bit more attention and see where we're at. But as of right now, I would call that my third path and really not even a path I'm tracking, just something to have in the back of your mind should we see a total meltdown. I find it hard to believe they're going to come up within 13 points of the all-time highs on the SPX and not get an all-time high, especially since the NASDAQ did and SMH and some others all got all-time highs, I think, and the Dow. I think that SPX will likely come back and eventually get this all-time high. So let's talk about our two main paths that we're tracking. Now that we got that out of the way, the first would be our primary path. And this is the primary path because the NQ continues to break support. Also because the ES did poke support. They haven't broken it, but like we talked about, but they did poke through it. And I do think there's more downside to come, and that would lead us into our B wave. And we were expecting an ABC off of the lows in October. I talked about it back then. If this was going to be bullish, we would likely see an ABC pattern. This has not been the most impulsive in the way of the overall movement. There's been very little in the way of pullbacks. And while it has been a strong move, that doesn't make it impulsive. So as we're looking at it, we would count this as the A wave high up here just below all-time highs. And then we'd be looking for a B wave pullback to around 4,500 to 4,550, even in the 4,600 range. I would think the upper half of that box would likely be the more common target, and the reason for that is it does fall in this consolidation area. The upper end of it is in the 4,650 range. I think they would get down into it a little bit. The lower end of this box is 4,600 right here. And then the 45.50 range is down here at this consolidation down here. So the fibs come in at 4,500 to 4,600, and then the consolidation box is pretty big over here. So that would be our target to the downside for this B wave. And you would expect that to come in as an ABC, where you get an A wave down, a B wave up, and a C wave down into that zone. And then you'd look for the resumption of the trend up in C. And we'd look for that C wave to take us up to about the 5,000 level. So overall, the pullback would bring us into the 4,600 area in wave B in a 3-wave move. And in my room, I give these levels out in much more detail. So if you want to know these levels, you can do that in our trading room, or get that in our trading room. But you'd look for a 3-wave move down into that area. Then you'd look for a strong move up back toward the 5,000 area to complete the move off of the lows, give us new all-time highs, and complete the overall rally that we've seen since last October. So that would be our primary path. And again, until they fully break this support, it's only the primary path based on a few things. I want to see this support fully break before I am on board with that being the more likely, or the most likely path in a meaningful way. Right now, it's like a 55-45 between the two paths. And that's just kind of how it works. Until support breaks, you have to kind of give both paths the benefit of the doubt. But I do think, based on other charts, based on where we're at here, based on the MACD, that there are more things to the downside to come. Now, in the alternate count, they need to hold the area they're in now, as in hold it today. They can't go much below this low over here. Otherwise, support will break and we'll be down looking at this B wave as a much more likely path than we are right now. So with that, we would look for them to hold where they are now, give us 5 waves up toward 48.81 to complete wave 3. One more pullback in 4, and then up to about 5,000 to complete the overall move. And then we'll see what we get from there as to where we're headed in the future. But I would expect a sizable pullback, if not a long-term bear market from there. But that's a bridge to be crossed when we get there. That's not something we need to focus on at the moment. So overall, those are the two paths. Either hold support where we're at right now, push back up towards 48.81, or break support, come back down here to the 4,600 to 4,500 area in wave B, and then push higher up toward the 5,000 area from there. Again, on the very back burner, it is possible we have a 5-wave move down, but we need to see much more structure before we have any confidence in that path. Over on the NASDAQ, now if you'll remember, I said for a long time on the way up, if you're bearish, the NASDAQ is the problem. It continued to break through resistance. It continued to rally. It continued to hit targets above where it needed to go to hold the bear market in place, and it broke its structure. On the way down, if you are bullish and looking for an immediate turn up, the NASDAQ is your problem. The NASDAQ has broken through support. It broke 16,636 decisively. It closes on the lows, and it does have a nice 5-wave setup to the downside after making an all-time high. Now, this one is a little more believable as a 5-wave move because we have made new all-time highs. So when the Qs have made new all-time highs and the NDX have made new all-time highs and you start a move down, then we could see a different kind of move down. Now, I don't think we're done yet. I don't think the NASDAQ is done yet. I don't think that this is all of the move up. But I do want to put that out there as a cautionary tale in case support breaks, to understand why support broke and where we're headed. So as we're looking at this, off of the high, what we'd be looking for as our primary path is an A, B, C down towards 16,153 at the 382 retrace into this consolidation here, into the previous B wave high and from the summer. All of that area is big time support. It makes a lot of sense for them to come down to 16,153. It's the 382 for the wave 4, which take us back up in 5, coincides with the B wave on ES, and overall is set up really well for that, and they've broken support. So this would be our primary path. We come back into the 16,150 area, hold there, and then push higher toward 18,000 to complete the move on the NASDAQ. That would give us 5 up. If we can do that, we will cross this bridge when we get to it and see what we get on the pullback, but we could be entering a much bigger pullback at that point, but we'll have to see what kind of structure we get there. So overall, this would be the primary path. They've kind of violated our previous alternate path of holding and making another high. So unless they plan on making a diagonal here for wave 5 of 3, which doesn't seem very likely, this would be the path I would expect, down to the 16.1 area and then back up. If they are going to make a diagonal, that is obviously very possible, but I think unlikely at this time. Wave 4 comes back down into wave 1 territory, and then you look at 5 back up for wave 3 of 3, and then you'd look for a sell-off pretty quickly back down from there and then up. So I don't think this is going to play out. Is not the most likely path, but it would be our alternate path at this time, as they have broken down through support here on the move down, and we would target the 16,153 area on the NASDAQ. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial. The reason is I want you to get in there and I want you to make sure you love it. Become part of the trading team. Test it out. Make sure it's for you before you ever spend a penny. You can cancel at any time. We have an incredible community in there, really talented traders as well as PT and myself. There's a ton of value. We'd love to have you. You have nothing to lose by checking it out. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand a market that doesn't make sense. When the market goes up on bad news and down on good news, it can be very confusing. But with Elliott Wave, you have the numbers, you have the support, you have the resistance, and you know what happens when those numbers hold, and you know what happens when those numbers break. You always have a path, you always have a target, and you always have an understanding of where the market is headed. This gives you a huge advantage over other traders. The course is 25 videos, where we go over the introduction, our Elliott Wave expectations, the mindset, the KISS method, our chart setup and tools, where we go through every tool you need to use with Elliott Wave Theory and how to use it, as well as the Elliott Wave for Beginners online course. We go through each wave. We go through all the corrective depth theory, the theory of alternation, the corrective zigzag, everything you need to know about Elliott Wave Theory so that you can understand this market and finally make some money and understand how to trade it. Now, the cool thing is, guys, if you don't want to pay the $67, I completely understand. You can get this course for free simply by becoming a monthly member. And one other benefit of becoming a monthly member is we're about to release our advanced Elliott Wave course and then a trading course and then some other stuff as well. All of that will be included in the monthly memberships. You never have to pay anything extra for those courses. You can, of course, buy them a la carte, but in here you get them for free. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as all of our training material that we release. We trade the SPY and the QQQ, and we swing and day trade, which means we do trade quite often. And if you're looking for futures trading, income trading, advanced training, as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as futures trading, income trading, advanced trading methods like PT's reduced risk binary method that just crushes the market. It's something you really have to see to understand. And that's another reason we give you that 7-day free trial, because we want you to get in there and make sure it's for you. He also trades individual stocks in there. Guys, we would love to have you be part of these rooms so we can all make money together. All right, our key takeaways for today: we are at support. The bulls have a test. If they can rally here, get back above 47.97, so 4,800, then 48.20. We would look for them to continue pushing up toward the 48.80 area to continue wave 5 of 3 to the upside. Then we would look for one more pullback and a completion of the move up toward the 5,000 area. However, if the bulls cannot rally and we do break support, then we would be looking at a bigger B wave down in 3 waves toward the 4,500 to 4,600 area. Over on the NASDAQ, they have broken support. They have decidedly broken the 16,636 area. By breaking down below that, it does make it much less likely we're going to have a more immediate move up, and we would be looking lower into the 16,153 area in a wave 4 before resuming the rally again toward the 18,000 area. However, if they do hold and come back and take out this high, it would be in the form of a diagonal, and we'd look for a very sharp sell-off and one more push up toward 18,000 to complete the move from there. Guys, that is your market update for today. I will talk to you tomorrow.